Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is February 2nd, 2013. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's take a look at current market trend and our strategy. US stock market is in strong uptrend. China stock market is also in a strong uptrend. My plan is long the US China market through the leverage ETF, such as MIDU, that's a 3 times mid cap ETF, FAS, those are 3 times US financial index ETF, XPP is a 2 times China Xinhua index ETF. And for the stocks, if the company report earning, before they report earning, I will sell the stock or reduce holdings, significantly reduce holdings and move the money into index ETF. And if I still think the company might report the good earning, I will spend a very small amount of money to buy the call option. And that way I can control my risk. And after the earning report, and I will reevaluate the chart and buy back shares if the chart is still good. Let's take a look at some of the US stock market index chart. Nasdaq index is in a very strong uptrend. It break out the previous resistance, the little resistance 3,100. It's going up. Gold index gold is in the downtrend. It has been in the downtrend for a year. Well, since October, this near-term downtrend, and right now is under the 50-day moving average. SP 400 mid-cap index and weekly chart. This index broke out. 2-year consolidation is going up. MID, this is a SP 400 mid-cap daily chart, is in a very strong uptrend. Russell 2000 small cap weekly chart, and this broke out the 2-year consolidation on the weekly chart. And Russell 2000 small cap index daily chart is a very strong uptrend. Silver index is in a downtrend, as you say, is making lower highs. SP 500 large cap index daily chart is in the uptrend. Shanghai Stock Exchange Composite Index. Last week I shared with you China stock market index made a 1-day reversal here, but little did I know the very next week, Monday, it reversed that previous reversal and going back up. So China market is back into a very strong uptrend. US dollar is in a downtrend, but now it reaches previous low, so the chance of having a short-term rebound is still pretty high. Light crude oil index, this is going up, it's an uptrend. GDX is a gold mining stock ETF, is in a very strong downtrend. IYR is a US real estate ETF, is in the uptrend. XLE is a energy sector ETF, is in the uptrend. XLF is a US financial ETF, it's a very strong uptrend. It starts the new year with a gap up. This is a very strong uptrend. XME is a metals and minings index ETF. It's in the consolidation phase. It's making a base here. Let's take a look at some individual stocks which have a strong fundamental and right now is near the breakout buy point. One is ARM Holdings, a breakout from a short consolidation. However, ARM Holdings is due to report earning on February 5th. So buying it before the earning can be very risky. So I would suggest wait until after it report the earning and see how market react to it. I'm holding chart. It finished a short consolidation. It going up and a very pretty decent volume. And next one is Celgene. Celgene breakout $100 resistance. Let's take a look at the chart. Celgene previously has a very strong uptrend and consolidate for a couple of weeks. Now it break up above $100. This is significant. $100 is a psychological barrier. Once it break out above that barrier, and going up is a it's pretty good chance of going up. Uh, DDD and SSYS is a 3D printing company. They had a big pullback and then they rebound from 50-day moving average. Here's the DDD. It pulled back hard and rebound and meet 50-day moving average and rebounded. If one know how to trade the short term, if they put a stop loss here, it should stop you out around $66. Now, after seeing its rebound for 50-day moving average, you may consider buyback. But this is only for if you sold around 66 or $68 range. Now you may consider buyback part of the share around $58. SSYS, similar to the DDD, it also rebound from a 50-day moving average. So if you have sold when there was a high or when they make that 1-day drop, if you have a stop loss to get you out of the stock around $84, right now is $80. That's a buy point. NSM, it break out the flag pattern. NSM is a National Star Mortgage Holdings. Previously had a very big gap up with a huge volume, but it pulled back. The pullback volume is not that high, and then it has a high volume rebound from this pullback, so it reversed the trend back to the uptrend now, with a pretty good volume. So this is a buy point around $35. That's all for this week. See you next week.